Welcome back to your daily business update on V4World. Today, we're breaking down the latest business outlook for Pakistan, covering economic shifts, soaring real estate prices, booming remittances, and much more. Stick around to get the most insightful updates to help you navigate today's dynamic market landscape. In today's video, we'll dive into Pakistan's economy as it faces some surprising shifts. Despite rosy economic indicators like the lowest consumer price index, CPI, in 30 years and record-breaking remittances, the country is still grappling with high property prices and ongoing economic challenges. Let's unpack what this means for businesses, investors, and consumers. We're starting with some good news. Pakistan's CPI for March 2025 dropped to just 0.7%, marking the lowest level in 3 decades. With the interest rate slashed from 22% to 12%, stability is returning to the rupee-dollar exchange rate, and the current account deficit is under control. But here's the catch. Consumers are still facing tough times, especially when it comes to the real estate market. Due to high construction costs, both new and old houses are becoming increasingly unaffordable, despite a soaring demand for housing in the country. In fact, Pakistan is in desperate need of over 12 million houses to keep up with demand. So, while these economic indicators look positive, the housing crisis remains a major hurdle for Pakistanis. Experts say that remittances play a crucial role in helping families make big purchases, like homes and vehicles. Did you know that nearly 50–60% of all remittances end up in the property market? This is crucial as we approach key events like Eid al-Adha and Eid al-Fitr. Shifting gears to the education sector, Habib University has launched its Institute of Design Thinking, Entrepreneurship, and Leadership, Ideal. This new initiative is set to promote innovative problem-solving and leadership skills, offering a strong foundation for Pakistan's future entrepreneurs. Ideal is part of Habib University's broader commitment to fostering collaboration, critical thinking, and entrepreneurship. Next up, Bank Al-Falah has partnered with Swift to launch payment pre-validation, a solution that promises to revolutionize cross-border payments in Pakistan. This partnership will help businesses and banks worldwide reduce the risk of errors, delays, and fraud in international transactions. The service allows real-time checks on beneficiary data, improving payment security and speed, a game-changer for global transactions. Looking beyond Pakistan, let's take a quick global perspective. Warren Buffett's net worth has surged by $11.5 billion since the start of 2025, even as the world's richest people have faced significant losses. Meanwhile, global trade tensions continue to affect economies. The Trump administration's tariffs have pushed the global default rate to 8%, and in response, major companies like Apple, Diageo, and Johnson & Johnson are investing $1.9 trillion in the U.S., signaling a strong commitment to manufacturing capacity. On the environmental front, India is grappling with its growing e-waste problem. The government is pushing for higher recycling costs, causing alarm among major electronics manufacturers like Samsung and Daikin. These increased costs are a blow to global companies, leading to disputes and lawsuits. Pakistan is seeing an impressive surge in exports, particularly to North America. Exports to the U.S. have grown by nearly 10% year-on-year, with textiles and clothing driving much of this growth. However, the country is also facing challenges, such as proposed tariff hikes by the US on Pakistani products. Experts warn that these could significantly reduce Pakistan's export competitiveness, especially in the textile sector. The big news for Pakistan's economy is the surge in remittances, reaching a record $4.1 billion in March 2025. This has brought new liquidity to the economy and provided a much-needed boost. It's no surprise that the Pakistan Stock Exchange, PSX, saw a massive 1,500-point rise as a result. Despite the positive developments, Pakistan's economic growth is expected to be a modest 2.5% for FY 2025, primarily due to sluggish domestic demand. The unemployment rate is at 7.5%, and poverty remains a serious issue, with over 40% of Pakistanis living below the lower middle-income poverty line. Foreign investment in the country's mineral and maritime sectors is a bright spot, but for Pakistan to truly benefit, political stability and economic growth must go hand in hand. There's a lot happening in Pakistan's economy right now, and while challenges remain, there are also significant opportunities, especially in real estate, remittances, and emerging sectors like technology and education. Do you agree with these economic projections, or do you think the challenges are too big to overcome? Let me know your thoughts in the comments below. If you enjoyed this video, don't forget to hit that like button, subscribe to stay updated with the latest news, and ring the bell to never miss out. Thanks for watching. See you in the next update.